Hello, good evening, everyone. Welcome back to my option Forex again. Uh, to the viewers of my show, I apologize for that. I think 2 weeks back when I actually missed the show, that was totally my fault. Yeah, but in return, I'm about to present to you actually something which caught me by complete surprise. Yeah, so I actually decided to actually take a new, no, I wouldn't say new, back to the roots of why I started this show. So is it really the exhibit the simplicity of indicators and some indicators like in the early stages of my testing, if you trade purely by their signals and give a reasonable stop loss and take profit, they can actually be profitable. Yeah, so I mean you can just refer back to my earlier testing results. It does show you that. Now today what I'm going to show you is actually interesting to me because at the back of my head I know that I didn't expect to be that good. I sort of knew that it was profitable. Yeah. So what I'm about to actually present to you, you can find an indicator in the link, which is known as HMA. Yeah. So HMA is actually a kind of moving average, Hull moving average, HULL. Yeah. Any of you actually know how many different types of moving average are there? I mean, be it for stocks or forex, there are how many different types of moving average? Yeah, it's actually way more than what the default indicators that you have. Yeah. So there are many kinds of different moving averages out there. So by default, MP4 will show you actually simple moving average SMA. And then of course, for ATW students, you'll be familiar with EMA. And you also have double exponential. So that's the third one. Triple exponential. Fourth, Wilder's moving average. Pretty sure most of you might not have heard of this one. Weighted moving average, linear regression, which no, I shall not spoil that. Then today I actually tested Hull moving average HMA. Now Guppy, I wouldn't say is a different kind of MA because it's Guppy. I mean, it is a trading system by itself. Actually, Guppy, yeah, it is actually a multiple EMAs combined together with just different value. So that forms the Guppy moving average. It's actually quite colorful. Yeah. Now on top of all, they're actually not counting Guppy. Is there what is listed here? There's actually about 7. Yeah, but there's also one more missing from here, which is also an SMA. Yeah, but instead of simple moving average, it's known as a smooth moving average. Yeah. So there are, I'm pretty sure there's actually 2 more, but I forgot the name. So there are actually about 8 to 10 different kinds of moving averages with different calculations. Yeah. So simple moving average, this is actually the earliest as moving average that's being conceived. And what traders don't like is that what some traders don't like is that it actually can be quite lagging. Yeah, in the sense that it doesn't catch up fast enough to price. There's a pros and cons to that. Sometimes the faster it catch up to price, the issue is that it gives you more forced information. Yeah. So sometimes the more it is lagging, it does actually give you a bit of a leeway when you enter later when the trend is actually much more confirmed. But different people like different kind of things. I wouldn't say which one is better or not. It really depends on each particular trader. But anyway, back to the topic. HMA is the one that I'm testing, and the results are good. And I would say it's really good. Could be due to the way that I tested. But I'll leave I would say the conclusion to you guys out there. Now, the way I actually tested this particular HMA, how moving average, you can see is on my screen. And I actually tested with one other indicator that's more for placing stop loss, yeah, which is the zigzag indicator. Now, I'm not using the latest calculation of zigzag. I'm using the past calculation, so I don't worry about its zigzag repainting issue. Yeah. So to clarify, the way that I tested this indicator is that look, when HMA actually when there's a crossover, as indicated by the arrow over here, I would simply actually place simulated to place a market entry, and the stop loss would be at the high of the previous zigzag. Yeah, since it's at the previous high, I actually don't need to worry about this repainting issue. Yep, so Mike has actually pasted a new link. Thank you, Mike. Now, so that's the entry. Done. What's the exit? The exit is that when there's an opposite signal that is shown, then I'll automatically assume, when there's opposite signal shown, I'll automatically assume stop loss will be either at the next level or the previous level. So it's in between. So whichever, it's hard for me to actually, I mean, theoretically, I would like the position to be exited immediately, theoretically. But for manual testing, it's actually quite hard to calculate the risk to reward ratio if I do that. So the next best thing is I can only assume that when the opposite signal is shown, a stop loss is being placed at the nearest level. Yeah. So for this particular setup, an entry is placed, and this will be considered a stop loss. Because while the opposite signal is generated, price has to travel back all the way to the previous level, which is a stop loss, the original level. So this will be a losing trade. So for this, you can see that this particular candle generated a signal, stop loss will be at the previous low, significant low. Now, when this opposite signal is being generated, stop loss is being placed at here because it's the nearest and somewhat the furthest. Yeah. And this will actually be considered a break-even entry because eventually price actually does touch it. Yeah. So this is actually the way I did my back testing. Now, some of you may think that one very important thing is that I will only trade one signal per trend. Yeah, so you can, every time there's a trend change, there's only one signal that I will jump in. Yeah, so there are times whereby you can see that, let's say for this, and the stop loss will be here. Sorry. Yep. And when opposite signal is being generated, so let's say here, then the stop loss will be in between 4R and 6R. Why is it not 5R this time around? It's because the candle, the opposite signal that's being generated actually cut across 5R. So the next best level will actually be 3 and 6. Sounds a bit complicated, but really I'm just trying to, in my mind, I'm just trying to simulate that stop loss should be at the nearest level possible. Yeah. If a candle happens to be cutting across a particular level, then a next level will be chosen. I hope that kind of explains the methodology for testing. Yeah. So, with regards to that, let's have a look at the results. So you can download this indicator here, HMA. NRP means non-repainting, alerts with arrows. AHTF means auto higher time frame. Yeah, so by default, when you place this indicator on screen, it will actually calculate the higher time frame, one time frame higher. Yeah. So this is actually the result. I pasted the settings that I used. Yeah. So on the lower left is a zigzag. On the lower right is the settings for HMA, our moving average. Now I didn't really change anything much, except for the time frame. By default is auto higher time frame. I've changed it to current, which is actually daily. Daily is the time frame which I tested, and this is the result. So because it's tested on daily time frame and on each particular pair, I actually went back as much as about some, not all, but some went back as far as about 3 years, and I took a total of 30 trades for each pair. Now this is what actually caught me by surprise, and I was really very surprised because almost all the pairs which I tested, and this is half of the majors and minors combined, all are actually profitable throughout. Now, when I started this journey for testing indicators, it's rare that I see that each and every single pair over a same number of trades, it turns out to be profitable at the end of the day. There might be some unprofitable ones if I factor all in 29 pairs. There might be. But still, considering that I'm testing half of it, I should still be getting some unprofitable results, which I did not get. Yeah, so this is actually what caught me by surprise. So in the end, what my table actually shows is that, look, the first column is break even. That if tested from one signal to the opposite generated signal, 1R, 2R, 3R, what's the total number of times that I would get it? So it's natural that the break even and stop loss actually got the highest number. Next is logically followed by 1R, 2R, 3R, so on and so forth. Sometimes, although it's rare, we actually hit a 10R take profit. 10:1. Yeah, so my cutoff level is actually at 10:1. I mean, to me, it's kind of pointless to test more than that. I've not yet met any traders who is willing to let their trades run up to 10R in the very first place. Yeah, so that's my cutoff point. So out of 30 trades, each pair, 450 trades tested total, I get a return of 667%. This is ridiculous. Either my testing method is wrong somewhere, or HMA actually does prove to actually have an edge if you are willing to let the trade run. Yeah, because recall that, let's go back to the screens. Okay. So I'll take this as example. So this is the candle generated, stop loss will be here, and cutoff point would be in between these two levels, because that's the opposite signal generated. So eventually this particular trade will only hit 1R after 61 days. Yeah. So to me, this is actually one of the purest form of trend trading, whereby I'm willing to let a trade run as long as possible. And when I meant as long as possible, that means I exit only when an opposite signal is being generated. Yeah, so to me, this is kind of a very pure form of trend trading. And boy, the results are actually pretty good. Yeah, of course, not all the signals are that huge. I mean, for this particular pair, it is ranging about 300 pips. Sometimes the zigzag level can be quite near. In that sense, then the range to risk will actually be smaller, probably about 50 pips. That's when you actually see the higher, the better returns comes in the form of 7R, 8R, or even 10R. Yeah. So this will actually be, moving forward, this will actually be the way I want to play around with some indicators, because I realized that some of the previous results that went in price action, other things, I kind of deviate a bit. Yeah, because the primary reason why I'm testing lots of indicators is to actually come up with a system, trading system, and of course, to share some of it. I mean, with your, if you want to actually develop a system, you can actually take some of the ideas that I've presented and try to come up one with yourself. Especially most of the indicators I share are actually pretty profitable on its own. Yeah. So, any thoughts? Either you're completely blown away or you're not here with me. Yeah. So as I was saying, the next together with HMA, I'll be testing two other indicators until year end. Sorry, three other indicators until year end, to see that in terms of trading a trend change, which one will actually, give me the best results. Yeah. So far, HMA blow my mind. I'm not entirely sure whether the other three which I'm going to test will be as good or worse or better. Yeah. I think it's kind of hard to beat this result. Yeah. All right. If you have any question, shoot. If I need to clarify anything, I'll be glad to clarify. Otherwise, this is it. Yeah. Given that this result is pretty awesome, I myself am tempted to actually develop a full trading system of it. Yeah, or for the lower time frame. Yeah, I think the next step for me to test will actually be to run a full test across all 29 pairs, run the 4 hour and 1 hour and see how is it. I think nothing beats this. Alright, so I don't see any questions coming in. With that, thank you for joining me this evening. I'm very happy to actually share this result, our moving average. Hopefully the other three that I've tested will actually bring me good results. And with good things, let's share. Alright, so I'll see you 2 weeks down the road. Have a good trading week ahead. By all means, play around with this indicator. I think it's awesome. Yeah, change the value a bit here and there. You might even get better, might be worse, I don't know, but that's the fun of actually testing indicators. Yeah, every slight tweak, you might actually get different sets of results, which some might be better for higher time frame, which some might be better for lower time frame. Nothing beats backtesting. You find the joy of looking at trades and you actually understand the chart better in a very, very objective way. See you 2 weeks down the road. Goodbye.